Quick market update. Well, the big news on the day was that the Federal Reserve is going to be cutting interest rates in September, but it's not really news. It's creating a lot of copy and content for the news media organizations and even, I guess, for myself. But basically, it's a foregone conclusion. The Federal Reserve is cutting interest rates at its September meeting. But what I don't quite get is the expectations that now exist in the tremendous spin that's going on to make everyone panic buy on Wall Street. The idea that the Federal Reserve will be cutting interest rates by 100 points and more this year, I think is highly extravagant. Basically, the Fed is still concerned about inflation, but it realizes the economy is in trouble, as I've been forecasting for over a year now, and it does want to cut rates. So with inflation staying where it is able to cut rates, but it doesn't want to mess everything up and create a roller coaster like the Reserve Bank of Australia does by going ahead and cutting interest rates aggressively or quickly. They will be taking their edge off the brake, their foot off the brake a little bit, edging off, but not hitting the accelerator for the US economy at this point. And also they want to be seen to be responsible ahead of the presidential elections. So I expect 2 25-point rate cuts this year by the Federal Reserve, which takes us to 50 points, with risk of one more 25-point rate cut, but I'm not even sure of that. So my forecast is 50 to 75 points. And from the beginning of the year, I said there could be 2 rate cuts by the end of the year. So 2 rate cuts, 50 points to 75 points. So anyone who's positioning for above 100-point rate cuts for the Federal Reserve is probably from the same organization, the same school of thinking of all of those who for the 3 previous years thought the Federal Reserve would be cutting by 150 points every year and were wrong. So they're probably going to be wrong again, and I don't get everything right either, so I'm not sure why I'm mentioning that. But the other big news, of course, on the day, I've been telling you the US economy is weak. Basically, the statisticians, well, one group of statisticians, because there was the budget office that was always warning that the payroll numbers being reported were wrong, but everyone just ignored that. So the final assessment is in, and the US has 818,000 fewer jobs created in the last year than it's been reporting over the last year. So it's nearly 1 million jobs that just are not there that, everyone, including the administration and the Federal Reserve, thought were there. And I kept saying, no, the economy isn't that strong. Just 1 million jobs. Let's just not worry about that. So the US economy is really in big trouble. And I won't go through all the reasons why. Okay, very quickly: manufacturing recession, housing recession, housing construction recession, commercial real estate property is in a depression already, and consumer confidence, small business confidence is at recession, at least perhaps depression levels. So yes, the US economy is in big trouble, and regardless of who becomes president, those troubles will persist. Gold's been interesting. So markets, gold. I still like gold. Gold's interest because people now want to buy gold because of interest rate cuts, but I think geopolitical tensions is still a better way to buy gold, and also diversity. A lot of people, a lot of BRICS nations around the world, and apparently 159 countries have just signed up to be part of the new BRICS global payment system, is several reports I'm reading, which is pretty impressive. So all of this diversification away from US focus. So it's just the rest of the pack catching up to the US economically. It had to have ramifications, and it is. Basically, I see people wanting to buy gold, but also we know that sovereign nations are very keen to buy gold at the moment to support perhaps their independent, individual, or alternative pushes towards having alternative reserve currencies. And I gave a speech at APEC well ahead of its time in 2012, where I spoke on currency issues, and I said that the world will move over 15 to 30 years towards 3 equal reserve currencies, being the US dollar, the euro, and the yuan. And I still think that's probably how the world is headed. So, but gold is part of that diversification away from the US dollar and away from US Treasury bonds. So, gold will continue to be bought. It also benefits from geopolitics and it will also benefit from lower interest rates. So, even though gold has come a long way, and remember 2 years ago I had a target of 24,450 for gold, and we've certainly surpassed that now. And further targets at 3,000, 3,300, but it could take 2 to 3 years to get there. But I mean, 2 to 3 years ago, I made this forecast, so you can make money out of those long-term forecasts. It will be a little bit volatile. Oil, so heavy, looks so bad. So I just bought some this morning. I also sold Porsche yesterday. I also sold Tesla and Apple. Apple looks very tired here. The US 500 index has really just gone sideways for two to 3 days now. Well, 2 days. So about 2 full trading sessions are going sideways. You know, you'll see the news headlines. The market was up, the market was down, the market was up. But basically, the range trading, it's just going sideways for a couple of days. So it could be running out of steam here, or it's just having a rest before it keeps going. I could be wrong on that. But I've just gone short, and I'm happy to sell what should be a rally in the morning in the Australian stock market as well. What else? Oh, yes, a real favorite at the moment. Watch that Australian dollar yen relationship, because I'm bearish the Australian dollar and I'm bullish the yen because it was just so oversold. And I know it's come back a long way, but it can probably come back further. So I think selling Australian dollar against the yen is something worth taking a look at from your own point of view. But yeah, I just thought I would highlight that today. I do not get how strong sterling is because there's a lot of problems in the UK. So any turnaround in the price action after such a strong rally in sterling could be something of interest as well. The US dollar obviously has had significant downside on the back of interest rate cuts, but I also think when people start thinking about interest rate cuts, they realize there really is a serious fiscal crisis going on, and that's another reason to sell the US dollar as well. All of that said, it has fallen an awful long way. And if the US dollar were to begin to turn around here, I would become a keen buyer because I'm always concerned of what could be happening in the background. And Russia just published a report where it's listed a couple of NATO member nations who were involved in the incursion in Kursk, either through equipment or pre-training for the event. So the geopolitical tensions are not off the table. Sadly, the tragedy in the Middle East continues to unfold with massive loss of life. This has to come to an end. But for the moment, it remains a very significant geopolitical tension risk that could continue to escalate even with a ceasefire agreement of some kind, because I believe the Israeli leader has already said that he doesn't see that as an end to the war, just a ceasefire. So we'll see how all of that unfolds. In terms of markets have tried to compartmentalize and ignore geopolitical risks, but they are real, they are there. Hence, I like buying gold, and if I see the US dollar begin to turn up, I will buy that as well. Hope you have a great day. Hope this helps. All the very best. Thank you.